This video is going to be the monthly review of how February turned out. And it's going to be using days quarterly theory to map out the entire month in very basic terms. Okay. So let's start off from the monthly time frame. At every start of the month, we always mark the highs and lows of the previous month. Okay, let's do that. We have this as the January's high, and then we have over here January's low. Okay, gonna do the same for NQ and NQ and Dow Jones. Dow Jones right here. Right. So we open the month over here, and then we traded higher first. Okay. Dow Jones was unable to trade above the previous month's high. And if you go down to when we go down into the 4 hours time frame, you will see that we traded into these highs right here in Q3 of the month, the third week of the month. Okay. And then eventually we reversed lower. Alright, assuming we are closing like this, it's Friday, so it should be somewhere around here. I don't expect like a huge retracement or something like that. Right. The draw on liquidity is right now towards the lows right here. We have equal lows on the monthly time frame for ES, and the wick right here for NQ. This week especially because it has not been traded too. So notice how we have SMT on the lows as well. Therefore, I would be using this swing low to this swing high as the range, the current dealing range. And over here below the wick, we would be in discount. So you only want to look for longs when you're in discount. I don't think that we have put out the top yet because we did not take out previous year's high. Usually that's supposed to be the case. So what I'm assuming is we are going to go lower and then trade higher before reversing again. That is my bias for the rest of the first half of the year, Okay. Now from here, ES, we have this wick right here. From this low to this high, 50% would be below 50% of the wick. And then we will have the OTE levels as well. Okay, with all this in mind, we drop down into the 4 hours. So for the monthly time frame, taking swing trades, we use the 4 hours. Right, so we open a month here. And this opening right here is the true month open. Right, we seen SMT between Q2 and Q1 with Dow Jones. Price did not break lower. We traded into January's high for both Nasdaq and ES, and then we have SMT on the highs on the daily time frame. So Wednesday high SMT versus Nasdaq right here. and then we shifted lower, breaking structure. Okay, so we're in Q3. We have been trading higher from Q1, Q2, and Q3. What is the expected outcome? We are at least going to tag into discount from this low to this high. The reason is because this is a short-term low. If we invalidate this low right here, we are going for Q2's low. That's very simple. So Fibs, no, not Fibs, just premium discount. Okay, so discount is right down here for ES. We reach into it with the displacement. For NQ, the low is right here to this high. We reached into it with displacement as well. But as you have known, as you would already know, SMT often indicates reversals. Okay, so when we have a higher time frame SMT with YM stacked on top with a low time frame SMT with ES and NASDAQ, we anticipate reversal, take out the low that made the high. Basically, you can use the previous quarter's low as your objective. It works on the low time frames as well. The previous quarter's low, that's what you're looking for. Okay. Provided that, of course, a higher time frame objective is met. In this case, we have a stop hunt on the monthly time frame. We trade it below, and then we trade it higher into OTE from this high to this low. There's a short-term high right here. You can use that high as well, from this high to this low. For NASDAQ, because it's not a higher high, you have to use the highest high as your OTE anchoring. So that will be from this high to this low. Right here, you would have your optimal trade entry. Over here, ES, you would have your optimal trade entry as well. And then we reverse lower. Usually Q4, if we have already started the reversal in Q3, Q4 it's usually not likely to provide any retracements because time is running out. Okay, because if it is a reversal, it's going to run Q1's low. That would be a true reversal of the quarterly theory. If we were just to run Q2's low, that's more like a retracement rather than a reversal. But on the lower time frames, you would see it as a reversal. Okay, so usually the Fibs projection would give you your optimal exits. In this case, we have 0.5 as the first low hanging fruit objective, and then we have 1 standard deviation. So in this case, first target can be here, and if we take out this swing low, we can look for 1.5 standard deviation because it's going to run the lows down here. As you can see, 1.5, and then eventually, if we're going to run this low right here, Q1's low, that is going to be 3.5. 3 standard deviation. Okay, right here we just reach into 50% between 2.5 and 3, and then we retraced higher. Same thing for NASDAQ. Right here, 0.5 low hanging fruit objective. Taking out the short-term low right here would mean that we're looking for Q2's low. Below Q2's low, 1.5. And then if we were to take out Q1's low, that's going to be 3 standard deviation. The maximum expansion is usually 4 and 5 standard deviation. So when we mark out the levels, 4 and 5. Save as OTE. We are almost there. Okay. Same with ES. We are almost there as well. So we are anticipating Friday to form the low of the week with 4, 4.5, or 5. Right? And we'll see if it plays out later on. So this is the move, the huge move for the month of February. Right? Every month there's a huge move. Okay? And because we are in February, let's take a quick peek in January. Is there any move right here? Okay. The only move in January was, the biggest move, right? It's from this low to this high. When we move to the left, we can see prices taking out equal lows, and then we moved higher, but in this case it does not present any form of SMT with regards to the near-term price action. But if you zoom out, the lows right here in November, that is the previous quarter's low. Quarters meaning 3 months chart, right? So Dow Jones took out the lows right here, whereas ES and NQ did not. At the same time, we traded higher. During the month of February, we made a higher high on the 4 hours. Okay, 4 hours right here. Higher high. Higher high. And higher high. Order flow was still bullish on the higher time frames. Okay, so what do we look for? We have this OTE entry for both NASDAQ and ES before the run higher. This was CPI, by the way. So first initial objective, 0.5. That's the low hanging fruit objective. Okay, if we were to run out this high, short-term high, we're going to look for this high right here, and just beside this high we have a near-term high. So 1.5 standard deviation would be above this high if we invalidate this level here, which we did, and then eventually it's going to reach into 2 to 2.5 before any form of retracements. So right here we have the 2 and 2.5 before any retracements, and once we retraced, we reach into OTE of this move higher. Okay, from this swing low, because this is a short-term low. Look at the reaction over here. Within OTE, we formed the SMT for ES, and when we take a look at NQ, Q3 NQ took out, I wouldn't say took out, but it traded way below. Okay, so in this case, we open up in Q4 higher. Right here we have another SMT between Q4 and Q3. So in this case, it validated ES to move higher. So ES was the more bullish asset in this run higher, because it has respected bullish P raise when NQ is not respecting it. And then right here, Dow Jones was not trading lower as compared to both of these assets here. Okay, obviously the most bullish one is Dow Jones, but I'm only trading, most of us only trades S&P and NASDAQ, so focusing on this two, ES would be stronger than NASDAQ, right? So same thing right here. We form this low and then we have another short-term low, right? Because it's an expansion, it's not like a accumulation. We don't use the lowest low, but instead we use short-term lows. Depending, right? So when you have an expansion like this, OT retracement is not going to retrace all the way from this low to this high, because this is the invalidation point. However, if we are in a consolidation, like the one that we have in February, you have to use the lowest low or the highest high, because it can form another SMT when it trades back, just like how NQ did on last Thursday and Friday. So over here we have OT retracement over here, and then looking for 0.5, which we eventually did tag, but it was next week. It was the following week. However, because NQ made a higher low right here, even though on the higher time frames it's more bearish, it made a higher low, and then right here you can see that 0.5 was met within the week. All right. And then after that we traded higher and higher. Okay, so every month there's something like this. There's always something like this. So moving forward, because we are bearish, I'll be looking to see where do we trade in the middle of the month of March. Do we trade lower first without having any form of retracements, or do we trade higher first to provide a retracement for a shorting opportunity? Okay, so on the monthly candle it's going to look like this. And then I want to see if we can trade lower and then move higher to take out the highs here in April. Because April, what is April? April is true opening of the year. So if we take out the highs here in April and one of them does not, then we can look for a reversal to take out the lows right here. As you can see, they are relatively equal. And that would be within discount from this low to this high. Same thing here, short-term low to this high, discount. Over here, short-term low to this high, discount. Okay, over here, if you want to do this again as well, because it's relatively equal, and if we take out this low, we're going to take out this low, right? So this could be invalidation as well. Right here we have 50% right down here. So maybe the roadmap would be we form a higher low for Dow Jones while Nasdaq and ES takes out the low right here, and then we move higher. The only problem with this is that if we do move lower like this, we are not going to form a fair value gap on the monthly time frame. On the yearly time frame. So what I'm thinking is we're probably going to range around this level here. Like we trade higher and then we just comes back down, range for this entire year. And then next year we move lower. Next year or so we move lower to provide the OT retracement into new all-time highs. Okay, so this is a very long-term view, and this is how I'm going to proceed trading for the rest of the year. Okay, with that said, thanks for watching and hope you find this insightful, and I'll talk to you again.